Welcome to Wall Street Trends. Today, we're zooming in on Warren Buffett, one of the world's most famous investors, and asking a burning question. Why is the Oracle of Omaha hoarding so much cash in 2025? Let's break down Berkshire Hathaway's massive cash pile and the factors behind Buffett's cautious stance. By early 2025, Berkshire Hathaway is reportedly holding well over $300 billion in cash and short-term U.S. Treasury bills, more than any time in its history. Buffett is known for preferring stocks and businesses over idle cash. So why let this mountain of money grow instead of investing it? Reason number one, pricey market. The first explanation. Stock valuations remain high. Buffett often says he won't buy what he considers overpriced companies. When the S&P 500 trades above its long-term average price-to-earnings ratio, it becomes harder for him to spot real bargains. If everything seems expensive, Buffett would rather wait. Even if it means piling up cash, he refuses to overpay just to stay active. Reason number two, market uncertainty. Second, there's market uncertainty, rising interest rates, potential economic slowdowns, and unpredictable global events. Buffett has historically built a cash reserve in times of froth or uncertainty, which allows him to seize opportunities when others might be forced to sell. Many analysts see his current stance as waiting for a rainy day scenario. He can buy undervalued assets if a downturn hits. Reason number three, waiting for the right deal. Buffett famously compares investing to waiting for the perfect pitch. He'd rather hold cash indefinitely than rush into a mediocre deal. In the past, Berkshire has made blockbuster acquisitions like Burlington Northern when prices felt right. With $300+ billion at the ready, Buffett can jump on a whale acquisition if one appears. Until then, he's content to earn interest on cash. Reason number four, higher interest rates boost cash returns. A fourth factor, rising interest rates. When rates were near zero, holding cash meant almost no return. Now short-term treasuries can yield 4% or 5%. This environment makes sitting on cash less costly. Berkshire earned billions in interest income last year alone. So Buffett's comfortable waiting for that ideal investment while the cash still brings in decent returns. Buffett's perspective and outlook. Buffett has dismissed the idea that he's bearish on America or the stock market overall. In Berkshire's annual letter, he reminded shareholders that most of Berkshire's money is still in equities. The massive cash stash is a temporary measure. He'll deploy it once he sees undervalued companies or attractive deals. Still, many watchers interpret this cash hoard as a sign Buffett believes the market might pull back, letting him pounce on cheaper stocks. Conclusion. So why is Warren Buffett hoarding so much cash? In short, high valuations, market uncertainty, a willingness to wait for great deals, and the new benefit of better interest rates. He's not abandoning stocks, just applying his trademark patience. If a recession or a major price correction arrives, Buffett will have a massive war chest to go shopping. Thanks for watching. If you found this helpful, hit the like button, subscribe to Wall Street Trends, and ring the notification bell for more market insights. Do you think Buffett's strategy signals a looming crash? Or is it just classic Buffett discipline? Let us know in the comments below, and until next time, happy investing.